this actually was created before Ripple existed. The creators of XRP decided there'd be 100 billion units because they saw it as rather than having a smaller number with a very high price, they saw it as something they wanted to be effectively a global reserve currency.
So let's just sort of think about this. You've got a bunch of different tokenization systems, and you want, ideally, you do want different countries, you want global commerce. Wouldn't you need a central bank, sort of one central, not necessarily reserve, well, sort of like a reserve currency where everybody could exchange their tokenized assets and trade them? Wouldn't that require?
We making moves. We making major moves. We making moves. We making major moves. We going all in like we got nothing to lose. We making moves. We making major moves.
What's up, everybody? I'm Mr. Man. Welcome back to my channel. Solid news today. But again, there are downward economic pressures still, so don't FOMO into this buy, okay? It's bringing us up to other highs again. We might find a bit of resistance and retesting at particular levels again. So don't rush into this, okay? I feel like there's more downward pressure still. The March 7th crypto event at the White House is coming up too, which might add a bit more highs to it. Unless you're trading this market, I wouldn't recommend playing within the market. If you're just buying and hodling, don't buy on highs, right? Buy into weakness, wait till XRP drops again. If you're trading it, cool, good for you. Good for you, make your money, that's where it's at. Anyways, today's news: Trump says crypto strategic reserve includes XRP, Sol, and ADA. Also, there was another tweet that was dropped, not a tweet, but a Truth Social. Trump is also including Bitcoin and Ethereum. Can't forget about those ones there. So how do we get here, right? There's the Riddlers that came out. This was 2020, I believe, maybe. I don't even remember the date, but possibly 2020. This had come out with this. Like, I thought this was somebody else had made this up, but this is a Riddler thing from back in the day, right? And then Brad Garlinghouse here's, I've said this before, the crypto industry will achieve our goals and beyond if we work together. Appreciate the crypto president, real Donald Trump, vision of a government's digital asset reserve representative of the industry. Maximalism is the enemy of the industry's progress. That's exactly what it is. The way they say it in Ripple, all boats rise. When the tide comes in, all boats rise. It's not one versus the other, it's interoperability. And people on Twitter stress me the hell out. We don't understand this. They think it's one versus the other. Anyways. And that brings me to here. I had dropped this February 14th. I had dropped it the year prior. I had dropped it the following year before that. This is about, I'll let Brad Garlinghouse say this, okay?
Well, so when XRP was created, this actually was created before Ripple existed. The creators of XRP decided there'd be 100 billion units because they saw it as rather than having a smaller number with a very high price, they saw it as something they wanted to be effectively a global reserve currency.
So let's just sort of think about this. You've got a bunch of different tokenization systems, and you want, ideally, you do want different countries, you want global commerce. Wouldn't you need a central bank, sort of one central, not necessarily reserve, well, sort of like a reserve currency where everybody could exchange their tokenized assets and trade them? Wouldn't that require?
So that's how we got here, right? That was back in the day. The other clip was from last year, I believe it was. And then today, XRP in the US is dubbed a global, well, a reserve currency, part of a strategic reserve, not a global reserve currency yet. That's still coming. Right now, it's just jurisdiction by jurisdiction. There's talks of Bitcoin in jurisdiction. There's talks of XRP in jurisdiction. There's talks of Sol, ADA, whatever. So this is exciting news, but again, remember there's downward pressure still to come. There's the Epstein Files Phase 2 coming out. There's talks of war. There's talks of tariffs. There's talks of, well, Zelensky always talking and talking and talking, and Trudeau and Canada and everybody else, you know, with Ukraine we stand, with Ukraine we stand. Let's send some more money out that way. And what's going on now, just to help, hopefully you guys recognize this. People are excited in the US because Doge is going department by department within the government entity, downsizing that. Phenomenal. But what's really happening that most are not paying attention to is the fact that this money that they're saving by removing government entities is reducing efficiency within the government. So the government is breaking down. They're going to be bringing and installing an artificial intelligence, but that has to operate on its own. So there's going to be a period of hard time at this point. Again, there's government being brought down. The economy is being brought down. People will need stimulus. There was COVID tossed out last year or the year before, COVID number 2 again. There's this one in China right now. There's monkeypox summit from last year in October. There's bird flu. There is, what is there? There's anthrax. There's planes falling out of the skies. There's UAPs. There's everything, okay? So how do we get here? Right, with the reserve currency status. So let's check this out. Here on January 23rd, 2025, Trump had signed this executive order known as Strengthening American Leadership in Digital Financial Technology. And what it goes on to talk about it, you know, I'll let them talk about it because they do a better job than I do. So I had a write-up here about this. This here is from a company called FIA, huge company in the US. And they're talking about this here. This is the breakdown of it that I provided in my group here on Patreon. So check this out here, and this will explain everything. It's a 4-minute video, and then we'll break it down.
Financial technology while protecting economic liberty. And I want to turn to Matt. You know, what does the order actually say?
Yeah, and thanks, Livia, and good to be here, and thanks for everybody's time. So as expected, this was a radical shift from the Biden administration's approach to crypto. So the order has a number of stated policy goals, so I'll go over a few of them. One is protecting and promoting access to public blockchain networks. Another is to protect the sovereignty of the US dollar, including through the development and promotion of US dollar-backed stablecoins. They want to ensure fair access to banking services. And then kind of the converse of what they want to do is they basically take a hard view against central bank digital currencies. And the order effectively seeks to prohibit either establishing or using those, which is consistent with what we heard during the campaign. The order also establishes a working group to achieve those goals. It's going to be within the National Economic Council, and it has, we're going to talk about this, but it has a very fast timeline to examine the existing regulations and to propose essentially a new regulatory framework for crypto.
So, timeline that you were mentioning for getting things done.
Yeah. Josh mentioned, one of them. So it's a number of, so the working group itself is a number of cabinet level and other, high-ranking officials. So it's chaired by the quote unquote crypto czar, David Sachs. He's the president's special advisor on crypto and AI. And then there's going to be officials from other key agencies. So you're going to have Treasury, Justice, OMB, Department of Homeland Security, SEC, and CFTC. The order actually excludes some traditional banking regulators from the working group. So you're not going to see officials from the FDIC or Federal Reserve. And in terms of a timeline, it's a very aggressive timeline. So within about 30 days of its issuance, so that's 2 days from now, the working group is supposed to be identifying, essentially inventorying all regulations, guidance, documents, orders, really anything that relates to the digital asset sector. They're going to start by identifying all of that in 2 days or so. Within 60 days, each agency that's on the working group is going to submit recommendations with respect to whether any of those items that have been inventoried should be rescinded, adjusted, modified, or adopted into a regulation. So that's at 60 days. And then at 180 days, the working group's going to submit a report to the president. It's going to outline a bunch of recommendations for essentially a broad regulatory and legislative approach to digital assets. I think what she says costs and burdens on companies that are still in this space. So although it's obviously a different tone, I think it's not one that suggests there's not going to be some activity here by the SEC.
Yeah, and just to highlight what you were saying about, potential expectation that there will be aspects of this market that remain within the SEC's jurisdiction, I think it is worth noting the topics that the task force says it's examining. It includes, security status, whether different types of assets are securities, and relatedly clarity on whether lending and staking programs, fall inside or outside of the SEC's jurisdiction. Temporary relief for coin and token offerings is part of what is mentioned in the statement.
Temporary relief for coin and token offerings is part of what is mentioned in the statement.
Temporary relief for coin and token offerings. And here we have the US now holding XRP as a reserve. I don't know what else to say to that one. Now this video here is a video of he used to be St. Louis at the St. Louis Reserve itself. This is David Andolfado, I believe his last name is, and he's going to talk about what the Fed can do now, because again, in the Strengthening American Leadership in Digital Finance Act, there's also a bill that doesn't allow for CBDCs to exist within the US. So how do they do this now, right? How do they do this? No CBDCs. How are they gonna stay competitive? Can't just have XRP as a reserve. A reserve is something you don't typically use. Typically. So let's check out what they can do though. This gets really interesting.
Fed is, people say, how can you trust, the Fed to do the bookkeeping? I mean, like I said, my response is, well, you don't expect the Fed to kind of steal your money. I mean, if the Fed can print all the money at once, it's not going to mess around with your bookkeeping. So, we have this big spreadsheet, the blockchain if you want, but it's just managed by the Fed, and it's very cheap, much cheaper than Bitcoin, if you're willing to delegate the responsibility to a third party. But then the downsides to all of that, of course,
it's cheap. It's much cheaper than Bitcoin, especially if you're willing to delegate to a third party, right? Listen to that. Listen to the words he's saying, okay?
You'd actually, suppose you didn't want the Fed to be responsible for processing the payments. I mean, suppose, the Fed will likely impose some KYC restrictions on some purchases. They might not process some purchases that you might want to undertake. And so it was at that point that I said, well, we could, if we wanted to, extend the concept one step further. I'm not saying that this is ever going to happen, but just conceptually, you could imagine not FedWire for all, but kind of like a Fed coin, where what the Fed would do is actually just issue these, Bitcoin-like objects, but and they would enforce a par exchange rate with the U.S. dollar. That would eliminate the exchange rate volatility. But they could delegate the clearing of these payments to some third party, some sort of Ripple-like protocol.
Others was like the rise of other CBDCs. So I do work in the US. We work with the Fed, and we work with the academic, a number of universities that also.
You heard it there. They could delegate to a third party such as Ripple. James Wallace here of Ripple states that we work with the Fed. The White House came out with this act. White House came out with this act here, and now that brings us right to here. XRP as a reserve. Here, Brad Garlinghouse was talking about as a global reserve. We just have it as a reserve within the US still. So we are extremely early still, right? There's still so much more to be had, so much more ups. So for all this to happen though, there's still a lot that needs to be looked at. And taxes are one of the things. Taxes, the global minimum tax represents a major step forward in international cooperation on the taxation of multinational enterprise, or M&Es. It will ensure the MNEs with revenues above 750 million euro are subject to a 15% effective minimum tax rate whenever they operate. So what this does is it puts the large corporations on a level playing field with us. When I say with us, I mean like corporate taxes now. Every jurisdiction will install a 15% corporate tax rate to operate. So when you hear Trump talk about, and again, this came out in January 2024. So when you hear Trump talk about, oh, we could have a 15% corporate tax rate, and then he strings it out, it's been set in motion for a time. Like they're just following the framework that exists, right? How they bring it out is here nor there. I don't know how they're going to bring it out, but they'll bring it out in whatever fashion they want. That means Canada's going to have 15%, US is going to have 15%, Philippines are going to have 15%, EU 15, UK, well, like whatever. They're all going to have 15%. Okay? So we have that out of the way now. We have XRP as a reserve within the US. We saw how it led up to that. We were told back in the day from Brad Garlinghouse. We were told by a Fed individual, David Andolfato. We were told by James Wallace. So no CBDCs. Let's discuss this. So recent U.S. legislative moves signals resistance to the Federal Reserve issued retail CBDC. So there's a no CBDC act or bill, but that's for a retail CBDC, not a wholesale CBDC. So on May 24, the House passed the CBDC Anti-Surveillance State Act, aiming to prohibit the Fed from issuing a digital dollar to individuals or even running CBDC pilots. Proponents of the bill argue a Fed-operated CBDC could threaten privacy and banking, while opponents worry an outright ban stifles innovation. With a potential legal bar on a direct central bank digital currency, attention shifts to private sector digital dollars. Coincidence? So the question becomes, can the Fed delegate a CBDC-like function to private institute such as Ripple, as we've heard, under the oversight instead of issuing it directly? This would effectively rely on regulated stablecoins, digital tokens pegged to the dollar, to fulfill any and many roles of a CBDC while staying within legal boundaries. So Ripple's RUSD stablecoin and the Fed's ties, okay? So Ripple's US RLUSD launched as a dollar stablecoin. It went live December 2024 after securing a New York regulatory approval. Each RLUSD token is fully backed 1-to-1 by safe liquid assets, US dollar deposits, US Treasury bonds, and cash equivalents to maintain a stable value. So for those stable values here, the last attestation, I'm still waiting for the January one. We're in March now. I don't recall a March attestation or a February attestation yet, so I'm looking forward to those still. Here is the one from Standard Custody and Trust. There we go. Standard Custody and Trust out in New York there. That's the company, what they call them now? Digital Assets Custody Company. Jesus, brain farts. The digital asset company out there for custody. And they're the one looking after the RLUSD. Here's the reserve report at this point here, where they were talking about the breakdown, what they had, what it was worth. So I'm going to continue now. So Ripple chose to issue RLUSD under a New York or NYDFS limited purpose trust charter, a license known for strict oversight and investment protections. So this means RLUSD is not a Federal Reserve liability. It's a privately issued digital dollar, overseen by state bank regulators. Formally, there's no direct reserve backing or partnership behind RLUSD. Its stability comes from the fully reserved assets and regulatory compliance, not a Fed guarantee. However, Ripple has signaled its intent to align with the traditional finance system. The RLUSD Advisory Board notably includes former central bankers Raghuram Rajan, he's an ex-governor of India's central bank, and Kenneth Montgomery, a former first VP and COO of the Federal Reserve Bank of Boston. Their presence does not imply any official Fed endorsement of RLUSD, but it does show Ripple is courting expertise in central banks and regulations, okay? As Montgomery stated, stablecoins are rapidly emerging as a cornerstone of the payments landscape, delivering speed, efficiency, and cost effectiveness that traditional systems often struggle to achieve. His involvement suggests at least informal dialogue between Ripple's stablecoin project and perspectives from within the Fed system. Right? Nonetheless, RLUSD remains a private sector initiative. Its backing is via commercial banks and custodians through the NYDFS trust structure, rather than the Fed account. If the Fed cannot issue a CBDC itself, an alternative is a synthetic stablecoin or a synthetic CBDC model, which essentially stablecoins issued by a private firm but fully backed by central bank money or safe assets under oversight. The IMF and central bank researchers have described a synthetic CBDC as a public-private partnership approach to digital currencies. Do you see where I'm going with this here? So in this model, the central bank provides the trust infrastructure, for example, allows access to its reserves or balance sheets, while private stablecoin issuers provide innovation and customer-facing services under supervision. Doesn't Ripple have a private CBDC ledger that can allow such an arrangement? Doesn't that sound familiar? Customers end up holding a claim that is indirectly as good as central bank money without the Fed directly handling retail accounts. As IMF experts put it, if stablecoin issuers hold all their clients' assets at the central bank, then clients would indirectly be able to hold and transact in central bank liabilities, the essence of a central bank digital currency. In practice, the stablecoin remains a liability of the private issuer, but that issuer's reserves are 100% in central bank holdings, other than risk-free assets, ensuring stability. This arrangement is what is known as an SCBDC or indirect CBDC, a Fed regulated digital dollar without the Fed directly issuing it. Boom! That's how that works. So RLUSD already mirrors aspects of this concept, except its reserves are in commercial banks and treasuries rather than the Fed. So it is a fully reserved fiat-backed stablecoin operating under stringent state supervision. So if the US regulators allowed stablecoin issuers like Ripple to hold their reserves at the Federal Reserve as a master account, RLUSD would effectively become a synthetic CBDC. Privately issued but backed by central bank money. In fact, regulators have contemplated this approach. For example, China's central bank requires major payment providers, Alipay, WeChat Pay, to fully back customer funds with central bank reserves. US officials have similarly discussed giving fintech stablecoin issuers access to Fed reserves under strict conditions. The KYC, the AML, cybersecurity, interoperability standards, come on people, which greatly enhances stability and makes the token essentially a digital cash equivalent. The Fed would still not issue RLUSD, but it'd be underpinned by the holding of the collateral. And this kind of collaboration has significant advantages because the Fed can focus on providing trust and safety while the private sector handles tech innovation and user interface. It's worth noting that current U.S. proposals on stablecoin regulations are moving in this direction as we speak. A draft bill in Congress, known as the Stablecoin Trust Act or the Genius Act, would only allow stablecoin issuers by regulated institutions. So, for example, insured banks, licensed non-banks under the OCC supervision, or approved state trust companies that meet federal standards. So such payment stablecoins must be fully backed one-to-one by US dollar or highly liquid assets and redeemable on demand. So we're technically going in this direction already. For RLUSD to be used within this ecosystem, within the Fed or the US ecosystem, XRP is now a reserve. Man, I feel like singing DJ Khaled right now. All we do is win, 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 no matter what. Got money on my mind, I can never give it up. Every time I step up in the building, everybody's hands go up. And they stay there, and they stay there, up, down, up, down, up, down. All we do is win, win, win. And if you're going in, put your hands in the air, make them stay there. Ludacris, no, I'm not going to bust that out there. Anyways, I hope you guys found value in this one. Where we started, where we're at now, where we are going. All right, I'll keep you guys updated. Have a good one.
We making moves. We making major moves. We making moves.